Hello everyone, welcome back to the channel. In today's video, we are going to go over the Adobe stock chart. We're going to look at it from the technical lens and the fundamental side. And the reason we want to do a mix of both on this particular stock is because, as the title says, this is a very different beast to navigate, and it has not been easy for most people. If you just look at it from the fundamental side, where most people have so far, they were calling a buy at 350, 300, and then 250, and now they're like, well, this is a no-brainer, so let's keep dollar cost averaging in. But this is not how trading and investing works, right? If you're wrong, you're wrong. So this is why we're going to look at it and attack it from both the technicals and the fundamental side. So let's do this. Let's start a little bit from the technical side. Let me give you a backstory. Let's jump into the fundamentals, and then let's go back to the technicals and figure out where we might see the bottom and why is the stock even down so much, right? A few months ago, I was looking at this chart from 400 to 500 range, and I drew this particular line here and told myself that this might be a great pivot to target for a company that is seeing a lot of headwind, a lot of AI fear and whatnot, because in 2018, we were trying to break over 250, 260 region. We couldn't break above these levels, but finally we did break out, retested 250, 260 area a few times here and started to push back up. Then we came back to retest it in the bear market of 2022, and we came very close to it and then pushed back up. So when I drew this pivot line, I told myself, if we can retrace 5 years of almost price action and flush below it, that will create a liquidity event where most people who have bought the stock in the past will get out, new money will come in, and the stock will have fresh new buyers who can hold it for another 3 to 5 years, and we can make our way back up. And that technically makes sense. Then another level I drew was below this previous low, because there is a situation where the stock flushes under this level if the uncertainty is all-time high and people are scared and they just want to get out of this stock, right? And that's where we are right now. The people who purchased this stock between 300 to 400 thinking that the fundamentals are great and we don't need to worry about the technicals are sitting at about minus 50% plus drawdown. So this is why charting is so important. I personally never purchased this stock at 300, 275, or 250. I recently just added at 196, and I'm going to walk you through why I did what I did, right? I'm up about 10% on this position, not looking to hold it forever. I might just swing it for a month or two, exit 90 or 80% of my position and just hold the rest, right? And with that said, let's jump onto the fundamentals. I put together this document using Claude, and if we're not using AI right now, I don't even know what we're doing, right? The title is Same Business, Half the Price, actually more than half the price, right? And 7 years apart. And the reason it titled it this way is because I want to take you on some time travel. Because you remember I showed you the chart at 2018, 2019, where it was at the same prices that it is right now. But I want to show you the difference between the business that it was at that time and what it is today. If we look at the annual revenue, they were at 11.17 billion, 24% year over year. Now they're double, actually more than double, at 26.5 billion. This looks like great news, but notice that the guided year over year is 12%. So we're not growing the same way we used to back in the day, but we are still growing for a behemoth of a company. 12% year over year growth is still pretty darn good, right? Non-GAAP diluted EPS 7.87. Right now we're in 24s, 210% higher. Digital media ARR 8 billion to 19 billion, 129%. Operating cash flow, as you can see, is up 127%. GAAP operating margin also a lot higher than before. Now, the reason I'm showing you these fundamentals is that the company has grown a lot, but why are you getting the stock at the same price or cheaper than it was in 2018, 2019, right? And this happens on stocks all the time. Either the market is wrong or the fundamentals are about to deteriorate and market is just ahead of its time, right? Let's talk about 2026, where we are right now. Record quarterly revenue up 13%. Non-GAAP diluted EPS is up. Total annualized recurring revenue, ARR, is up. Now, this is a number that matters a lot. AI first ARR has tripled year over year, and this is the number in the next earnings I want to see improve. If all the money is pouring into AI, and Adobe says that we are positioning to be the next big AI product, and we're not about to become the dinosaur of the industry, then I need to see the money flow into the AI first ARR. I want to see this jump in double or even triple digits, right? The next thing you notice is the freemium users, which are the Creative Cloud free users who get the opportunity to upgrade as they use, is up from 50 million to 90 million. And a lot of people are seeing this as a negative. They're like, if the product is so good, why are they giving out free subscription to Creative Cloud? And I think they're doing this because there was a generation of people who used Adobe in the past, but the new generation need to get a taste of it. And I think that's how they're positioning it. Give it out for free and see who subscribes for more. Same with ChatGPT, right? ChatGPT has a free version. Claude has a free version. The moment you use it, you want to pay for the extra subscription to get nice outputs, new data, and whatnot. So those are all the numbers that we're seeing right now. And as far as what actually driving growth forward, as we talked about the freemium funnel bet that they're doing, they're positioning their AI products. There's M&A going on. They purchased SEMrush and Topaz Labs. And another thing is 25 billion buyback authorization. So they're buying back their own stock and saying it's too cheap right now. This is what the company is saying. The chart says otherwise. This could all be correct or this could all be wrong, right? That is very much possible. And with all the fear in the market, the management is still guiding higher for 2026. Another red flag that the market is watching for is the two C-suites that are leaving: the CEO of 18 years, 28 years at the company, and the CFO. Now, this could be red flags or this could be a positive thing for the company because we could get some fresh new ideas. On the other hand, there's so much opportunity and money in the market right now. Who wouldn't want to change their jobs if they get double the raise or whatever, package they're getting? So it could be just a pivot for money. It has nothing to do with Adobe. We just don't know right now. Moving to the next part, where does the street stands today? What are analysts saying? The current stock price is about 218 today. It was 210 when I created the document. Analyst targets are about 282 roughly. Most people are saying just hold the stock. And that is the fundamental story for you. And this kind of explains that this entire drawdown that we're seeing is just market pricing in to understand if Adobe is still going to be the behemoth of a company and they're going to continue growing into the AI side of the world, or are they going to become the dinosaur and the fundamentals will deteriorate? Now, notice that all the numbers I showed you were upward trajectory, but the stock is coming downwards because market thinks that we need to price Adobe as a brand new company who's positioning into this new world and they need to prove their worth. So as low as the stock is right now, Adobe fundamentals need to change. They need to show some growth. And this is not one of those charts that I can just buy in at forward PE of, I don't know, I think right now at about $200 price, Adobe's forward PE ratio is 8 to 9, which is an amazing entry for a good growing company. But Adobe needs to prove themselves. Moving on to finding where the bottom might be for the stock, I entered at 196 because I think as far as compression goes on this stock, people wanting to exit this stock because they don't know the future, this is as bad as it gets. I don't think we can go any further lower than here. I think that if fundamentals deteriorate moving forward in next earnings or two, that is where we might see another flush lower. If we do not see them overcoming their guidance, if we do not see the company continuing its growth, we might flush another leg lower. And I do see a scenario where we could hit around 150 to 175 area, but that is only if fundamentals deteriorate. As of now, for me, technically, this is it. I do not see a reason to go further lower than this, which is why I went in and purchased the stock at this area. What I think might happen now is that we get a massive rally because we have priced in all the bad things. We have crashed down below 200. So we are going to get buyers come in that will be positioning for the next big leg for Adobe, the next bull market. And then the earnings come out and we might just go sideways a little bit, tap back into here. And then maybe if the fundamentals deteriorate, we go lower, which I think is less likely. But if the fundamentals are doing well, we might just reverse from here. This might take a year, 2 years, 3 years, because a company takes time to position themselves. and it takes time to show growth on fundamentals. For me personally, this is a little too much uncertainty for me to hold a stock for that long. I will probably exit about 80% of my position before the next earnings, get the nice swing trade off of it, and then hold maybe 10-20%. Because that is such a small portion of my position, I can just sit on it for next 5, 6, 7 years and see where it ends, and it won't even affect me, right? So you just gotta position yourself according to how you manage your portfolio. And if you are someone who is feeling FOMO to jump into the stock, trust me, there are way better companies out there that you can enter for the long run that can give you better results with less uncertainty, but they're just going through their cyclical bear markets right now. For example, one of the stocks that I entered recently was KMB. Entered the stock under $100, already up above 10 to 13%. A long-term good quality company that you don't have to worry about, right? So don't feel the FOMO. Trust me, these things come and go. And follow my channel if you do want to keep a close eye on good quality stocks that you can purchase at good prices, because I will help you be patient and not buy just because everybody's buying it. So I really hope this helped. You found some value in this video. Please leave a like, subscribe to the channel, and I will catch you in the next one. Thank you so much.